Welcome back to Alpha Recap, your end-of-day sector rundown from stockalpha.ai. Markets close on a bit of a patchwork note today. Some clear winners, some obvious losers, and a lot of nuance in between. As always, if you have questions, you can reach us at stockalpha.ai. So, what really stands out here is how pockets of progress, especially in materials, AI tech, and logistics, were driving the tape while policy, labor, and geopolitical risks kept a lid on other areas.
Yeah, absolutely. Today felt like a check-in on who's delivering operational proof versus who still lives behind headlines. You had miners turning on production, AI features getting monetization signals, and big logistics deals closing, all of which the market rewarded. At the same time, energy and some financial subsectors were pulling back because of policy and supply concerns.
Let's start with the outperformers. Materials and mining got real momentum from actual project milestones. Uranium production started up at a Burke Hollow operation, and recycling and magnet recovery projects moved from pilot to commissioning. When you step back and look at this, those are the kinds of events that change valuations. They move companies from optionality to revenue generators.
Right. Production starts do something very simple for investors. They reduce execution risk. When a development stage miner actually starts shipping product, analysts can model cash flow rather than just hope for it. That's why materials names rallied on that kind of concrete progress today.
Short reaction.
Big move.
Technology and communications also outperformed. Google and YouTube rolled out AI product features, and there was that integration of a streaming app inside a major chat platform, all of which signaled growing monetization paths for platforms and software. If you saw platform names finish the day up, this was why. The market liked the early revenue signals.
Right. And the other thing is the market is less excited about AI as a vague future story and more excited about demonstrable ways it boosts advertising, subscriptions, or engagement. That's the difference between a headline and something that moves earnings models.
Short reaction.
That really explained the lift.
Real estate and logistics were another notable outperformer. Institutional buyers kept buying big industrial assets. A marquee deal closed in South Florida for an 818,611 square foot park. The price was $219.7 million. Deals like that showed investors were still prioritizing speed and certainty over squeezing the last basis point out of price.
Exactly. Rapid, large transactions like that underscore the tightness in distribution real estate. E-commerce and nearshoring trends kept demand strong for modern logistics product, which in turn supported leasing fundamentals for industrial real estate names.
Now, on the other side of the ledger, energy was a bit of a mixed bag. Renewables and storage saw progress. Think record solar deployments in Singapore and approval for an 800 megawatt photovoltaic farm in the UK. But oil narratives and EV demand signals were under pressure because of geopolitical moves around the Strait of Hormuz and downside revisions from big banks.
Yeah, that was a classic bifurcation. The renewables build-out is ongoing, and that supports demand for materials and storage, but the broader energy complex was dented by both geopolitics and macro forecasts that lowered oil demand expectations.
And importantly, supply chain constraints showed up in energy too. An emerging gas turbine crunch was cited as a potential bottleneck for thermal generation. That's a reminder that scaling power infrastructure isn't just about project approvals. It's also about having the hardware and lead times to deliver.
Finance and banking were cautious heading into earnings. You had mixed crypto flows, modest first-day inflows into a new bank-sponsored Bitcoin ETF, but net outflows across the broader US spot Bitcoin ETF complex, and that kind of rotation created ambiguity. JP Morgan was coming up on the calendar, so traders were positioning for the bank results as a directional catalyst.
So what really stands out here is that the ETF flows looked more like reshuffling than fresh, broad-based demand. New ETFs can cannibalize incumbents. That's what seemed to happen today.
Cannabis also felt the policy pain. Federal rescheduling momentum stalled, yet states continued to move in different directions. For example, West Virginia was releasing $38 million in medical cannabis revenue, while other states pushed back on expansion. That patchwork raised capital raising and operational questions for the sector.
Short reaction.
No clarity, unfortunately.
Okay, shifting gears to the cross-sector themes that stitch today together. First, AI kept showing up as a broad growth engine. Product rollouts at large platforms and AI content experiments in media were a common thread that lifted parts of tech, communications, and even consumer content.
Second, renewables approvals and record solar deployments were clearly linked to demand for critical minerals and recycling tech. When you approve big solar farms, you don't just buy panels that day. You create long-term demand for the metals and magnets in batteries and motors.
Third, logistics demand continued to support industrial real estate. Big transactions and institutional capital chasing distribution capacity suggested leasing resilience, especially in key corridors tied to e-commerce and nearshoring.
Fourth, policy kept acting as a cross-cutting risk. From cannabis to utilities, state and federal decisions were creating winners and losers. Investors reacted in places where regulatory clarity was lacking.
And finally, supply chain and labor constraints showed up repeatedly. A big strike at a chemicals company, worries about turbine lead times, commissioning milestones, and magnet recycling. All reminders that hardware and people still drive volatility.
Short reaction.
Let's zoom into the most significant single moves and why they mattered. First, that South Florida industrial buy signaled strong appetite for stabilized logistics product and speed of execution. Second, the uranium production start at Burke Hollow mattered because it shifted a developer toward cash flow reality. Third, magnet recovery commissioning was notable because recycling reduces long-term reliance on new mining for electrification components.
Add in the Morgan Stanley Bitcoin ETF starting with modest first-day inflows set against net outflows from the broader US spot ETF complex. That highlighted rotation in crypto exposure rather than a uniform inflow picture. And the labor action we saw, a strike involving more than 1,300 workers at a major chemical manufacturer, could ripple through supply chains if it prolonged.
And then you have the renewables headlines, Singapore's record solar deployments and the UK 800 megawatt PV approval, which quietly reinforced the long story for storage and grid investment.
A quick explainer in plain language about why these commissioning and production milestones matter. Investors price in uncertainty. When a company crosses the line from permitting to funded drilling to shipment or commissioning, that uncertainty shrinks. That's why material stocks that showed progress were rewarded today.
Now, some accessible definitions so listeners can follow earnings season and headlines. When analysts talk about monetization signals for AI, they mean things like rising ad revenue tied to AI features, more paid subscriptions, or higher engagement that boosts average revenue per user. When we say rotation in ETFs, we mean money moving between products instead of new, fresh capital coming in.
And when people discuss a supply chain choke point, picture a factory that can't get a critical turbine or magnet on time. That single delay can slow many projects and push up costs across a sector.
Short reaction.
Helpful framing.
Okay, for investors watching the calendar, here are the key things to keep on your radar. Informational, not advice. 1. Bank earnings and guidance, especially the upcoming JP Morgan report, which could shift sentiment on credit and liquidity. 2. Crypto ETF flows and regulatory updates. Filings and regional rules like Dubai's token guidelines could change custody and trading dynamics. 3. Critical minerals project timelines and recycling rollouts. Commissioning or funded drilling materially changes execution risk.
4. Renewables permitting and supply chain indicators. Turbine and inverter lead times, plus battery raw material pricing, will determine whether project starts actually meet projected timelines. 5. Labor and input supply risks in industrials. Strikes or export controls can cause sudden stops. 6. Logistics leasing metrics and cap rate movement. Absorption rates and rental growth tell you if institutional demand is continuing to push valuations.
7. Dig beyond the AI headlines to find monetization evidence. Look for engagement and average revenue per user upticks rather than just feature announcements. And 8. Policy calendars for cannabis and healthcare. Small legislative developments can have outsized impacts on certain names.
A quick note about sector pairings. Materials and utilities are increasingly correlated as renewables scale. Real estate and industrials move together when logistics demand tightens. Tech and media are linked via AI content economics. And renewables plus materials is a natural pairing because of the upstream demand for battery and magnet components.
Okay, 2 short takes in under 10 words.
Operational proof drove performance today.
Policy risk capped some upside.
Looking ahead, the catalysts that could broaden or narrow today's leadership were pretty clear. Consecutive positive prints on AI monetization and more material project starts in mining and recycling could widen the leadership beyond a handful of winners. Conversely, a renewed geopolitical flare-up near oil choke points or surprise regulatory action in finance, cannabis, or utilities could reestablish a defensive tilt.
So, to wrap up, 3 clean takeaways. 1. Markets close selectively risk on. Operational progress and AI monetization were rewarded. 2. Policy, supply chain, and labor risk kept parts of energy, finance, and cannabis under pressure. 3. Watch catalytic events like bank earnings, project commissioning, renewables permitting, and ETF flow patterns for signs of broader rotation.
And a quick reminder, this recap is informational only. Analysts noted the themes we discussed, but this is not personalized investment advice or a recommendation to buy, sell, or hold any security. Use this as color for research and consult your own advisors for decisions.
All right, that's our wrap for today. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you after the next close.